All right, welcome back. Invest Info, episode 18. And today I want to speak about mistakes and failures in investing, right? Um, Down 26,000. And as you can see in this current position right here, it says total return almost 26,000, right? Uh, the position has dropped currently. This is active today, almost 43%. Since I got in at $5, right? 10,000 shares at $5 and different things. And it's just dropped. The stock has fell 42% now. This loss is not realized until you sell, right? So I know this could seem, and it does, mentally frustrating, sort of depressing. But thankfully, this is why these videos are so helpful. When I went down in the position, I looked at other investors such as Monesh Pabrai, who manages millions of dollars and getting in stocks at 7, seeing it fall to 1, still not selling. Peter Lynch, seeing stocks fall from 40 to 1, didn't sell till they returned. And sometimes these companies could go to zero on you. That's how come when the stock began to fall, the first thing I wondered was, is this company going to become insolvent? And listening to I wanted to hear the tone of the management team, because I did look up the management team using Yahoo Finance, seeing their history behind, what have they done? Who's on the board? How do they sound during the earnings report? And that's the sort of the thing with investing is, you could be wrong, and you could only lose as much as you put in, so how much money can you lose is a common question. How much can you lose as much as you put in? If you put in $5,000 and you make a investment, right, and the stock runs up and you sell quickly at 12,000, let's say you lose all that 12,000. You didn't lose 12,000. You lost what you put in. You lost 5,000, right? Well, you couldn't lose more than 5,000, I could say, right? Because you did have an opportunity to take out 12,000. But you did some bad mistakes, and you're going to make a ton of mistakes. All the great investors make a ton of mistakes. In fact, I'm doing this, the inspiration for this one, because I was listening to Stock Compounder, and he was doing a lesson on Monesh Pabrai's visit to Boston, and he was speaking about mistakes, right? How we might be in a company that we understand, and we get out of it, sell at a loss to get into the next hot thing, right? A very emotional decision. We're humans, we make them. And one thing Bogle, another investor says, Jack Bogle says, I believe it's Jack Bogle. He says the mistress is always better than the wife, right? Meaning the mistress might seem hot, but you know nothing about her. Whereas to your wife, you know exactly what you're getting, right? So that's sort of what happens. Now, during this, when I was seeing the stock fall, Joseph Carlson, a dividend-based investor, he put up a video where he showed a friend that his portfolio dipped almost 125,000 during '08, and he just kept investing, kept buying. Now that portfolio that dipped 125,000 is a little over $600,000 portfolio. And it goes back to what Warren Buffett says. This is a business. We're in something where there's no called strikes. And I'm going to play a snippet of Buffett on that same thing that he just mentioned.
Securities business. You literally every day have thousands of the major American corporations offered to you at a price that changes daily. And you don't have to make any decisions. You have to make, nothing is forced upon you. So there are no called strikes in the business. The pitcher just stands there and throws balls at you. And if you're playing real baseball and it's between the knees and the shoulders, you either swing or you got a strike called on you. If you get too many called on you, you're out. In the securities business, you sit there and they throw U.S. Steel at 25, and they throw General Motors at 16, and you don't have to swing at any of them. They may be wonderful pitches to swing at, but if you don't know enough, you don't have to swing. And you can sit there and watch thousands of pitches, and finally you get one right there where you want it, something that you understand, and then you swing.
Right. So Warren Buffett makes a good point. We're getting prices tossed at us in the stock market every single day. And we don't have to swing at them. We don't have to swing at every attractive thing that we see. We have to just find something that we understand, and then we make the move on that. Now, can you be wrong? Yes, you can be wrong. You could. A lot of times, you think you understand something, and look at this whole situation with the coronavirus. A lot of people are into this 11-year bull run that the market's been in a stampede. And all of a sudden, you might have gotten a stock at 400 and it fell to $100. Now, what do? You know? Now, did Warren sell off during the pandemic? Yeah, he sold out of the airlines. He didn't want to get in airlines in the first place. He always felt that they don't have any competitive advantage. But you might have said, damn, Warren Buffett says invest in crisis and stock prices fell. But remember, Warren Buffett is not looking at prices. Did the value and the fundamentals change? And it did. So that's when you get out. And he made a mistake. He made a mistake in Dexter's shoes. Going to make thousands of mistakes, man. So when approaching investing, you have to be willing to understand that I can be wrong. You're trying to find businesses, look at the cash flow statement and do a future discount. And again, the future is not guaranteed. But we try to buy at as Benjamin Graham, Charlie Munger says, a margin of safety price. Meaning if this company was to liquidate itself right now, sell off all its assets right now, what's the price of this company? And is it trading at a price discounted to that price? Because you still want to have skin in the game. But yeah, I figured I'll do this because I know sometimes we do active things in the market. We buy things based on some tips we heard. A lot of times we just buy things we don't understand. Why? Because of emotions. And that's some of the habits we want to kick. Primarily repeating mistakes. You're going to make a ton of mistakes, but the ultimate thing you want to do is to learn from these mistakes, learn from these errors. And again, even though this position is down 25,000 or down 42%, since my investment journey, I have more than doubled my return, right? So again, this loss is not realized unless you sell. So if you're down a position, if you got in a company and the algorithms, these high frequency traders, bring the stock price down, you should be excited, right? You should want to buy more. And that's really telling. That's when you really know you found a business you understand, when you actually want the price to go down for a little bit so you can buy more of it. That doesn't mean you're right. Just because you're contrarian does not mean you're right. But you bought you're buying at a margin of safety price, So yes, mistakes are going to happen. Failures happen even with the greatest investors. So that's something you have to be willing to accept when you take the step into investing, not only in the stock market, but in real estate or a business or whatever your venture is. All right. I'll see you on the next one.